Good day, everyone. So, I want to explain this short move that happened in price today on GPUSD. This is GPUSD futures, CME group. And if you wonder why I am analyzing the futures chart, I've made my explanation of why I use futures chart to analyze the market instead of the normal CFD brokers chart. I would love to explain this short that happened. I talked about it on Telegram. I talked about it on my Instagram. I talked about using, you know, time-based liquidity and also structural liquidity. So I will be doing the in-depth in this video, and I'll also be explaining how you could participate in this short. Personally, I missed out on my entry because I used a confirmation entry, so I missed out on my entry on this short. But it doesn't mean that's not the main purpose of this video. The main purpose of this video is to teach you guys how to use time-based liquidity, structure liquidity in a way that no matter how you trade, either you trade supply and demand, support and resistance, it is going to help. Any type of way you trade, because liquidity is fuel in the market, liquidity is what makes markets, it's what market is attracted to. So yeah, so first of all, let's talk about the liquidity areas that I will be explaining. So the first one is the structure structure liquidity, which is the swing high, swing low, internal structure highs and lows, substructure highs and low, right? And then we talk about the time-based liquidity, which is the previous daily highs and previous daily low, previous session highs and low, previous weekly highs and lows, previous monthly highs and low, right? And then the last one, which is, you know, it's kind of everybody knows that, but it's also a liquidity area, but not and kind of attacking liquidity. It's more of a liquidity, where price tends to react from is the imbalance, right? The imbalance is which is the fair value gap. Sorry, imbalance. So I'm going to start with structural liquidity. Now, structural liquidity, no matter the concept you trade. Now, listen, no matter the concept you trade, either supply and demand, support and resistance, anything you call it, structure is king. Meaning, for you to get so good in what you trade, irrespective of how you trade, when you structure properly and you use these liquidity concepts, this structural liquidity, time-based liquidity, and also imbalance, it's really going to 10x your win rate because you are going to be able to, spot areas where okay, this area, market is reaching for this area. It can be used as your target and it can be used as an area of reversal. It can be used as, a lot of things to, make you make informed decision in the market. So let's start with structural liquidity. Now, structural liquidity, structure, we have a bullish structure, right? A bullish market structure, and we have a bearish market structure, right? So when we're talking about structure, you could see every eye, right? We have the major structure, which is the swing structure. So this low is liquidity. Anytime price puts a high, this low becomes a liquidity point. Anytime price creates a new low, this high becomes a liquidity point. Anytime price creates a pullback, right, and price, internally, right, this liquidity internally, right, because it's internal to external. Anytime price takes the internal liquidity, either by the left hand side or um, the current low in price most times, this high becomes available and price goes to take this liquidity. So this is also a major liquidity, right? Or there are some instances where price creates a swing high, a swing low, a swing high, you have a pullback. Sorry about my drawing. Price fails to put in a new high. This means this low is a liquidity and price is well coming to take it. And we could continue lower, or that could just be is major liquidity area and for price to continue bullish. So understand. So Structural liquidity is very, very important, and you have to understand it. And it doesn't just happen, it's not just about swing structure. It works with structure is structure, right? So you have to understand structure is, it's very broad, irrespective of how you trade it. The proper way me I trade structure is I use swing structure, internal structure, and I use substructure. Meaning we have the overall swing structure, the internal structures, and we have the overall the substructures, which are the internal structure inside the internal structure. For example, let me use this. Like I said, I want to use this today's shot as an example of case study for you guys, right? So if I zoom out on GPUSD, I can understand that the structurally we are bearish. The swing structure we are bearish, right? And after the swing structure is bearish, since we are still bearish, right? This is the internal structure, right? This is the internal structure range, right? These are the internal structure range. Now, inside this internal structure, right? Let me talk about this is the last swing internal structure high. We had this low. Forget about this. This was when CME data had issues, so this is nothing. So we had this low and we had this high. You could see inside this internal structure, we still add more ranges. Those ranges are what the substructure, and most times they are areas of liquidity too. So you could see here, right, after we had the break of internal structure, we were expecting a pullback, either for price to come and read this low and continue selling, or a pullback to at least the 50% of the range, right? Let me use this. So at least 50% of the range, right? 50% of the range before we continue buying. That's not the point of this video. The point of this video is understanding how to use the structure, right? Area. So you could say this is we have this low, we have this high, we have this low, we have this high, we have this low, we have this high, we have this low. The high becomes what? Liquidity area, right? So structure liquidity are, they are our swing high, swing low, substructure high, internal structure high, right? Now let's talk about time-based liquidity. Time-based liquidity is very, very simple. So depending on how you trade and the time frame you trade on, if you're a day trader, you really want to be working with the previous daily highs and lows, previous session highs and lows. If you're a scalper, previous session highs and lows. If you are a day trader, previous daily highs and lows, right? If you are a bit of a swing trader or a short-term trader, previous weekly highs and low and previous monthly highs and low. Now, basically for me, I use everything because that is, I use the higher time frame to get my bias, right? So obviously, I'm also aware of using the previous monthly high, previous weekly high. The previous daily highs are what I execute on mostly because that is how I trade. I'm a day trader, and I trade sometimes a day, 2 days, 3 days, depending on how volatile the market is. So basically, for the indices, which is gold and Nasdaq, my trades mostly is max 2 days, but for GU or Euro USD, sometimes it takes 3 days, for it to play out, depending on how volatile the market is. But the point I'm trying to say is this high right here was a substructure high, and you could see what the price came, used that high as well, which is what a liquidity area, and price sold. Now, this is where it gets interesting. If you look at this high, this aim high, you'll find out this aim high was what? Previous daily high. Previous daily high. Let's go to the daily time frame and let me show you guys. So you see what I was talking about, right? This was the previous daily high, right? The market open, raided the previous daily high, expand lower. So you see how when you put together the time-based liquidity and the structural liquidity, it is very, 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 very good in setting your bias, and you can use it in any situation, right? Let me give you an example, right? Look this. We had this bullish candle. What did this candle do? This candle open, raided the low, you had a bullish day, right? It happens majority of the time. Now, I talked about the last part, which is area of imbalances. This is how you can use imbalances to your favor, right? Let me give you an instance. This is an example. We have this, right? This low, we created this low, we had this high, we created this low, we had this high. Now, this low, what did I say? This low becomes what? Internal structural low. What the price do? Price is it as well. Not only as well, what the price react of? Price reacted off a strong area of imbalance. In fact, this is even a very strong area of imbalance, right? Reacted to the demand area, imbalances. Imbalance, sorry, after taking the internal structural low. price created a high. If you can, sit down and understand how to frame, you can use it to frame your bias. You can use it to even validate your trades. You can use it to validate your trade ideas. So the point, I'm making in this video is now let's go to 4 hour. Let's go to 4 hour. Let me show you guys today's trade as an example. Then around, of course, I really don't want this video to be long. I just want it to be short. Don't want to dish out too much value for you guys. So you could see price came to that high at exactly after reading that high, I will dumped. So let's go to 15 minutes time frame. Let's go to 15 minutes time frame. So my network is slow. Let me turn this off. Um, okay. So what can you see, right? So let's look at price. This is the 15 minutes time frame. So structurally, we are bearish. We had our recent break of structure. Here, we created this high, right? Then we created this low. Price didn't close below, but it's a structural low because we've created the range, right? Then this was on Monday that opened. We created a new low. And what do you see? What did price do? Price returned back to what? The swing high. So you see, when you put structure together, most times substructures, highs and lows are swing structure, highs and lows on 15 minutes time frame. So I feel like I'm going to make a whole series on structure, and it's going to really be in depth. So in the coming days or weeks, I'm going to make a full video on structure and how to restructure properly. But for the meantime, right, we had this low, we had this high, we created this low. What did price do? Price came to read that high. What will happen? A lot of people will be seeing this as what? A break of structure, and price is ready to start, getting going bullish. And what will they start doing? They look for a demand area at this level. In fact, it's making sense now because this is Asian session. So it'll be like, okay, Asian session, as is liquidity equal lows. As clients going to start buying here and they're going to get wrecked. So, but when you understand structural liquidity, time-based liquidity, you'll be able to make more informed decision, right? More informed decision. You could enter in a lot of ways. If I understand this as liquidity and I'm expecting a sell from this eye, it is very, very simple. I don't even need to wait for confirmation entry. If, basically for me, I love confirmation entry. I love to see more confirmation for price. And it has its own pros and cons, meaning it has advantage and disadvantage. But if you are someone that just trade off zones, right, this is a very clean supply area for you to sell from, right? A very clean supply area, previous daily high, structural liquidity high, a very clean trade. This is a very clean setup, right? You put your entry right there, stop loss above that high, move the refine zone, right? You give it the buffer. In this scenario, you give it buffer and make a target. You're targeting the next opposing liquidity, which is what? The swing low. You make it 1 to 4. This is a clean 1 to 4 trade. Sweet trade. You get in, you get out. Right? So this is very, very simple. I hope you guys get one or two from this video and you learn from this video. If you really want to, this is something you want to look into, you can watch over again and again, understand it. Go on your charts, just gather data about it. In fact, this could even be your model. This can just be your model, right? This can literally be your model if you work around it. And also it doesn't even have to be your model. It can just be a way of improving your system, either in framing your bias or not getting trapped. Because I know a lot of traders who are trying to buy here at this particular point, trying to buy this demand zone because now there's a break of structure and then no, the market moves, don't forget we have time. This is time, right? This axis, right? Time, and this is price. So the market moves, right? And everything is making sense. There's no guesswork. Structure is king, right? Structure is how the market moves. So there are areas of liquidity to it. Time-based liquidity. Remember, we have time. This is price. Imbalances and inefficiencies in price. There are areas that price needs to rebalance back. So you see how it's the real logic of the market, not just trendline liquidity. No one cares about trendline liquidity. How the market moves, what really moves the market is what the market is, going for. So yeah, so that's it. I hope you guys get one or two from this video. If you don't understand this video, I would love you to watch again and again till you understand it. And if you have anything you want me to talk about, put it in the comment section and I will make a video on that. So yeah. And if you have not subscribed, like I noticed majority of you guys watching the video have not subscribed, please do well to subscribe to this video. Just do well to subscribe to this video. It's gonna be I'm gonna really, really appreciate it. It's gonna really help, the channel to also and also share the video so it can reach out to others. So yeah, have a great day, everyone.